Is the Bitcoin bull run over, or has this all just been one of those crazy situations to make you doubt everything before Bitcoin goes on to crack over $100,000 over the next couple of months? Well, in today's video, I'll be exploring that as well as the latest news from the SEC, which is spooking the market, updates on the Evergrande story, and much, much more. My name's Lark. Every day I make videos talking about cryptocurrency investing, so if that's a topic you would like to stay up to date on, maybe learn some more about, make sure you subscribe to the Lark Davis channel. Also, if you have a real quick second to tap on that thumbs up button for the YouTube algorithm, that'd be super, super awesome. And of course, click on the notification bell so that you know when I put out a new video. By the way, if you do want to earn some passive income with your cryptocurrency, you need to get yourself an account over on Celsius. You can earn 6.2% on your Bitcoin, 5.35% on your Ethereum, and 8.88% on your stablecoins. All you need to do is deposit your crypto, sit back, and let the passive income start rolling in. Use the link down below in the description to start your account, and you'll also get an extra $50 in free Bitcoin after making your first deposits. Okay, now let's go ahead and take a look at the charts here. So this is actually on the weekly here. Now, what's very interesting is that we've seen Bitcoin looking pretty rough over the last few days. We'll just take a quick look at the daily chart just so you can see the savagery that has gone on in just a few short days. But I think it's quite interesting actually to have a look at this and kind of realize that what has happened here really, well, essentially we've seen the price of Bitcoin coming back down, flipping previous resistance here and here and here into support. We've come back down to retest the breakout. Very, very interesting. That's, of course, a bullish move. If we do obviously hold moving forward here, I think the market still has a bit of jitters around this whole Evergrande thing. We'll talk about that more in a minute. But I did get my orders at $40,000 filled for Bitcoin, so that was nice. That was nice to wake up to. Got that filled early this morning while I was still getting ready for the day, and nice. A little more Bitcoin for the long-term stack. But there is a good potential that this whole move here could actually end up being quite a bullish launch pad for us if we do indeed end up having a strong weekly candle close where we did flip that resistance into support. We'll see, of course, how the next few days play out. Bitcoin, once again, stuck in an interesting zone at the time of recording this video anyway. We do have that resistance still overhead at $42,500, which was support that failed. Now it's become into resistance again. Like to see, of course, Bitcoin closing over that over the next few days. But one thing that does make me think about what's happening in the market is that so many people wait for these kind of dip opportunities to come. And then when the time comes, so few pull the trigger. Investing is risky, obviously. Investing in anything is risky, including holding cash. Holding cash is risky. It's just, I guess, a risk that people don't seem to understand or see because of the slow death of inflation and all that stuff. But anything you do financially has some kind of risk with it. But usually, what happens in markets? People get overly bullish when the price is pumping, and they get overly bearish when the price is dumping. Where the money's made in the market is by buying into the fear. When everyone else is fearful, that's when you buy. What's the saying? When everyone is greedy, you should be fearful. When everyone is fearful, you should be greedy. That's paraphrasing it, I suppose. Or the other one, when there's blood in the streets, buy it even if that's your own blood. Right? This is how the market works. Market psychology. We buy low, we sell high. Or we buy low on Bitcoin dips and just hold it as a long-term wealth asset. There's also that too. But you can add to altcoin stacks during this whole market correction as well. There's been some great deals on some very quality altcoins. I'm sure you guys have been gobbling up some of those dips as well. But now's the time. Now's the time. And I'm not saying that we can't go lower moving forward. It depends on a lot of this stuff happening in the news and how much it spooks the market. But we have entered into the extreme fear zone. Now, historically, buying Bitcoin during times of extreme fear has been a good buy. That Bitcoin Fear and Greed Index, it can drop lower. It can drop lower. I'm a buyer if it drops lower. But it can drop lower. But even if it does, it still holds true that buying in times of extreme fear have historically been the times of maximum financial gain. So you don't have to go in all at once. I think this is a mistake that a lot of people make. A lot of people think, well, great, now is the time to buy. I'm going to put all my capital in today. I'm never all in the market. I've got a big stack of stable coins that are sitting there. I've got cash out of the market completely. I've got cash in stocks as well. And when I see these situations happen, I put percentages in, fractions of a percentage sometimes. Put those buy orders in where I gobble a little bit here and I gobble a little bit here and I just add on the dip situations. I buy in the fear. If we dip further, if we go farther down, I will buy more because I have not deployed all my capital. It allows me to consistently nibble away and build positions for the long term. Because I think not about what's happening tomorrow for crypto. And I know this is a crypto news channel in a lot of ways. We do talk about what's happening today, tomorrow, next week, next month in crypto, but my investment thesis for the asset class, multi-year, end of the decade and beyond. By the way, this is just so typical. I just thought I'd show this to you because it's a good chart. This is the total supply of Bitcoin held by short-term holders. Classic situation. Massive run-up, people buy. And then once the market starts turning, people sell. This is the exact opposite of what you want to be doing. You want to be buying low, selling high, or, with altcoins anyway, Bitcoin, long-term wealth asset. But realistically, most of the market is buying high and then selling low, right? There's still people who bought it $55,000, $60,000, $65,000 who are still capitulating. They're still capitulating. Maybe they saw this most recent run up and thought, well, we're going to go back to all-time highs now, so I'll finally be able to cash out, break even. And now they're, market's going down. It's better to get out of this. Realize that 25, 30, 40% loss before things get worse. That is not how winning is done in the market. Here's a great chart for you, and we've talked about how I believe Q4 is going to be massive for crypto. September, look at this. September, usually a bad month in crypto. But Q4, that's October, November, December, more often than not, tends to be strong. So we can see 2020, good Q4. 2019, Q4, not so hot. 2018, well, that's pretty brutal. 2017, great Q4. 2016, great Q4. 2015, great Q4. 2014, not so hot. 2013, so just kind of below my head here, but that was a 449% gain for Bitcoin in the month of November. So pretty good Q4 once again. And we see as well, if we look at 2016, 2017, I think that's quite informative because what did we see? 2016 feels like an interesting parallel to 2020 where we saw a good run up. That's after the Bitcoin halving. So this is, 4 to 6 months post Bitcoin halving in 2016. And 2020, it was 5 to 7 months post Bitcoin halving. We see a massive rally starting to take off as that supply reduction starts to really have an effect on the market. And then 2017, we have a massive blow off at the end of the cycle. I think we're going to see a similar thing here for 2021. Historically, we've seen that playing out where Q4 tends to be a bullish quarter. In 2013 and in 2017, 300% plus rallies for Bitcoin. Now, what would be something coming up that would make Bitcoin rally like that again. It's the Bitcoin ETF. A Bitcoin ETF getting approved is going to unleash the bulls in a crazy, crazy way. That's going to bring a lot of money into the market. There's so much money right now sitting on the sidelines. They don't want to buy Bitcoin and manage their own keys and stuff like that. They want to be able to go to the brokerage account, buy Bitcoin via an ETF, and let somebody else deal with key management and all that BS. This is going to open up the doors in a massive way. Obviously, I want it to be a spot-backed Bitcoin, not a futures-backed Bitcoin, although we're probably going to get a futures-backed Bitcoin first. By the way, another Bitcoin ETF application has gone in today. This is one that Invesco and Galaxy did together, so it's a joint filing between the two of them. Now, Invesco, in case you're not familiar with them, they're a massive player in the equity markets. Invesco has done a lot of ETF products. Galaxy is a crypto native company. They're big time into crypto. In fact, Galaxy has a Bitcoin ETF listed on Canadian stock exchanges. I think they have an Ethereum ETF also listed on Canadian stock exchanges. They've just applied for a physically backed Bitcoin ETF. This is what the market really needs. Fidelity also been out there meeting with the SEC, making the case as well for a physical backed Bitcoin ETF. This is what the market needs. This is what's actually good for the market. A futures only backed Bitcoin ETF is a net negative, I think, for the market. And look, I think that could still pump the markets. I do. I think we could still see a pump come out of futures-backed ETFs just on the hype and all that stuff alone. But if you want to talk about real impact for the market, you have to have the spot-backed ETFs. That's what we want. Now, maybe a futures-backed ETF is the gateway drug for the SEC to get on board with a spot-backed Bitcoin ETF, but I would really like to see the other way around. A futures-backed ETF, those will come. Those will be part of the picture without a doubt, but I don't want them to be the leading factor because that allows too much power for Wall Street to be able to manipulate the price of Bitcoin, and I don't like that at all. Now let's move on to talking about the SEC, everybody's favorite three-letter organization. They are reiterating, really, their calls for cleaning up the crypto market. He comes out and he says, it's time to clean up the crypto market before a spill happens. Get your brooms, everybody, because it's a mess. Oh, man. These guys, I tell you. Here's the thing you need to know about this SEC announcement today that's spooking the market, because people are a bit spooked once again about the SEC. Nothing he's said here is new. Just reiterating more of the same. We already know this. We already know Gary Gensler has got just this mega hard-on for getting out there, cleaning up the crypto market, going after everybody he can, going after Coinbase, going after, well, I guess the Ripple suit started before Gary Gensler took over, going after all these different companies, going after Uniswap, saying that basically every token in existence is a security. He's busy. He's a busy guy. Now, Gensler reiterated his commitment to taking a close look at crypto platforms, since many of these tokens that these venues support could have attributes of investment contracts or securities. If they're found to support securities, that makes them subject to securities laws and SEC mandate. And if they fail to register, enforcement is coming. The SEC is going to start going after exchanges, I think, in a pretty serious way in the USA. They're going to go after them and fine-comb through their books, fine-comb through their customer bases, subpoena staff, all this stuff, and they're going to go through token by token. And we're probably going to see a lot of delistings coming up if the SEC gets its way, which could have a pretty negative impact, I think, on liquidity for a lot of US-listed tokens. People need to start figuring out how to use DeFi, and to do that ASAP, because decentralized exchanges list all this stuff. And it looks like the SEC is going to be cleaning up quite a few of those tokens over the coming months and years. It's probably going to take them a long time to do all this stuff, to be fair. But the SEC does have exchanges in their crosshairs. Now, there's, I guess, some potential that some exchanges might try to become a securities exchange. I could see Coinbase, for example, going that route, but it adds a whole extra level of drama and BS, and they still are probably going to have to delist a truckload of tokens. So there you go. SEC also putting stablecoins once again in their crosshairs, saying that stablecoins are basically casino poker chips. The SEC, man. The SEC, they really don't like stablecoins because stablecoins are eroding the power of the dollar, essentially. You can send dollar-denominated stablecoins anywhere in the world, completely outside of the jurisdiction or the power levers of the U.S. financial system. And it's driving them crazy. You can go out and buy tokens, buy whatever, send money wherever, and they can't stop you. And they like to be able to stop people. They like to be able to pull those levers and say, nope, you can't access your bank accounts. Nope, you can't access finance. Nope, you can't send money to your family in that country. People are tired of it, but obviously these guys have a monopoly, basically, on global currency domination. The 90% of the Forex market's US dollars. Most international trades denominated in US dollars. They want to make sure that it is the dollars that they can control that are getting that business. Stablecoins are threatening to overturn that apple cart. Also, Gary Gensler today saying that DeFi platforms that operate outside the perimeter of their jurisdiction, they're coming after those as well. He says, we have robust authority at the SEC and we will use it. It would be better if the platforms that are trading securities that have lending products and staking products come in and let's figure out how to get them within the perimeter. That's just not how it works. It's bullshit. It's bullshit, man, and it's not how it works. Because Coinbase tried to meet with the SEC and they said, we're not meeting with any crypto companies. We're not going to meet with you. Biggest exchange in the USA, they refused to talk to them. So how do you think they're going to take it when you have a developer from some DeFi protocol, let's say, I don't know, MakerDAO wants to go in and talk to the SEC or some of these other guys. SEC's not even going to talk to them, but they might legislate against them. They might sue them. They might subpoena them. They might try to shut them down. SEC, man, a bad actor indeed. Anyway, that's the SEC FUD of the day. We'll see how all that plays out over the coming months, obviously. Hopefully they don't go too hard in terms of pushing the U.S. in the wrong direction. Finally, for today, let's talk about Evergrande. It looks like Evergrande is going to make its bond payment this month. There was some fear that they were going to miss the payment on Thursday this week, therefore going into default and sending the markets into a tailspin. They've said they're going to be making their payments. The bull run can now recommence. That, of course, does not erase the fact that there's still $300 billion in bad debt from Evergrande that needs to be unwound throughout the markets. So the Evergrande story is far from over. This is just moving the chairs around on the Titanic by making sure they got their payment in. We still have a big debt problem from Evergrande that has not been solved. There's been no announcements from the CCP whether or not they're going to be doing a bailout for Evergrande. So still continuing with this story, but the market did seem to like the fact that the payments are being made this week. So that's a good thing short term. Also, the media hops straight on board with extra FUD for the crypto market. Apparently, the collapse of Evergrande could bring down Tether and, of course, the entire cryptocurrency market along with it. That deserves a come on, man. What are you doing? What are you doing here? In this news broadcast from CNBC, which is a massive counter indicator of the market, to be fair, they basically said that, well, Tether is not 100% backed by cash, which it isn't. It's got like a couple percentage points of actual cash backing it, but that it's backed by a lot of cash equivalents, so a lot of debt products, and that some of those debt products may be Evergrande. We don't know what's backing Tether because Tether doesn't tell anybody. But look, there's no chance in my mind that 100% of the debt, or even 10% of the debt, or probably not even 5% of Tether's commercial paper stuff is Evergrande. Even if it was 5%, that's not going to bring Tether down. I mean, come on. Tether was 70% backed for months. This was back in 2019, I think. Nobody cared. Nobody cared. Tether still maintained its peg. If a little bit of the paper backing Tether turns out to be bad, the market's not going to care. It's not going to bring the entire crypto market crashing down. Also, we're seeing more and more analysts basically come out saying that Evergrande is unlikely to lead to a global contagion event like Lehman did. It's too specific. It's just Chinese property markets. A lot of the exposure is with Chinese banks and Chinese companies. The Chinese Communist Party is probably not going to let things get out of control. So let's just get back to the bull run now, please. That would be great. That would be great, guys, if we could do that. We'll see, of course, if that's what happens. The markets are very jittery right now. There's a lot of fear in the markets. Any little stories can send the market into a tailspin pretty quickly. If that happens, well, I'm there waiting to buy those dips. Those are my 2 Satoshis for today. Your question. Do you think that we've seen the end of the Evergrande story, or is this just a momentary pause before things get a lot freaking worse? Let me know down below in the comment section. Thanks so much for watching today's video, and peace out till next time.